more on the markets and all the record highs we've been seeing. I want to bring in Jeremy Siegel, Professor Emeritus of Finance at the University of Pennsylvania's Wharton School of Business. You've been a long-time bull, but the truth is there have been moments where you have pulled back or at least told folks to hesitate. Where are you now, Professor?
Well, I still think the momentum is there. Make the trend your friend, go with the flow. I mean, we're selling at 20 times forward earnings, which I think is quite reasonable. I mean, the tech stocks are 30 or plus. The rest of the market is, 16. So, there's a lot of stocks that are quite reasonable if you don't think the tech can continue its movement upward. But, overall, the momentum is still positive, and I'm still positive on the market.
The Siegel family is doing what? Are you playing the Magnificent Seven? Have you moved down to the Fantastic or Fancy Four, as they're calling them?
No, we're much more broadly diversified. Even though certainly I wish I put everything in NVIDIA. I heard you say Warren Buffett said nothing much could move the needle. Well, if he had NVIDIA, he would have moved that needle. Certainly, the momentum in some of those stocks, might still be beginning. I mean, I looked back at 99, 98, 99, 2000. The big stock then, if we remember, was Cisco, which was supposed to be the first $1 trillion stock. We know NVIDIA hit a $2 trillion stock. Cisco was selling at 120 times earnings in early 2000. Well, my goodness, if NVIDIA ever got to that valuation, it would be at $3,000 a share. Yeah. Now, I'm not making that prediction. I'm just telling you how crazy things can go.
Yeah, or NVIDIA, which is probably NVIDIA. But
NVIDIA.
But Professor, the bottom line is you were right that the market was going to keep going up. The thing you were wrong about was the economy, right? I mean, you were pretty sure that the Fed was way too tight, needed to cut. The economy was slowing much more drastically than anticipated. And a lot of people, I thought the same thing. That was not the case.
Well, and that was the case a year ago when SVB failed. I thought, oh, my God, it's the beginning. But I pivoted in July, and I said, you know what? I was looking at the data. Hey, this economy is getting through these interest rates. And then I became, much more bullish on what the economy is going to do and backed off from any recession probability. Yeah, I was definitely that way a year ago, but I pivoted last summer, and I still see that strength despite the interest rates that the Fed has had. And see that strength into 2024.
In any rate cuts ever?
I think the market is almost saying, who's afraid of the big bad Fed? I think there will be rate cuts because I still think inflation is on a downward trend. I think we had somewhat of an anomaly in January. I think we're going to get better CPI numbers for the month of February. But the truth of the matter is that the economy is surviving these rates. As you saw, the NABE today raised it, almost doubled its GDP forecast to 2%, which I agree with. In fact, it could be 2.5% this year. So as long as the economy remains strong, there is no hurry for the Fed to lower those interest rates. I mean, I think that's the bottom line.
Does that mean you think we could go the whole year without anything? I mean, that's in a sort of Jamie Dimon-esque sort of posture. I mean, in fact, I think he had said there was even a possibility they could raise rates at one point.
I don't think they're going to raise rates because I think inflation going down that, will convince them to be on hold. Is it possible that they won't lower rates this year? Yes, that is possible. It's not my baseline projection, but as I look at all the real data and all the real-time real data, I don't see any real slowdown yet. But I'll tell you why I don't see the inflation. Sensitive commodity indices are still going down in a downtrend or flat, and that is not an inflationary trend.
So we're walking into an election year here, and there is a view, and if you look at some of the charts historically, that it could be that once you hit summertime, and in fact, one of our guests last week made this point, you do get into a bit more of a volatile situation. In fact, there's some investors who think that once you hit the summer, things will get a lot more complicated quickly. Are you of that view?
Well, historically, the third year of presidential terms are the best. The fourth is usually fairly good. But Andrew, I think you'll agree with me. This is going to be a presidential year like none other. And to try to say what has happened in the last 20, 30 years is likely to repeat this year, I think is perhaps stretching it. I mean, there could be surprises on any side with any candidate. So I would.
But doesn't that just add to the uncertainty if that's true?
I mean, I think it adds to the uncertainty. The truth of the matter is, at the present time, I don't think that the market is all that concerned about who is going to be president between Biden and Trump, between those two candidates. Remember, 4 years ago, we had Bernie Sanders in the mix. The market was very concerned about that, being a socialist coming into the presidential race. But, both Biden, and Trump, and there's pluses and minuses. They both call themselves capitalists. In fact, they both call themselves pro-market people, which I have not seen for both sides of the aisle for a long time.
So to recap, we have some key inflation data coming out Thursday, the core PCE prices. Jeremy says the markets are selling at 20 times forward earnings. The rest of the markets are at 16 times. They are not that expensive. He recommends to be broadly diversified. He says broadly, as in a lot more than the Magnificent Seven. He says if we turn into a bubble, stocks can go a lot more parabolic than this. States Cisco going back up into the hundreds of PEs. Said if that happens to Nvidia, they could be in the $3,000+ market cap just in the PE expansion. He said we have an extremely strong economy, stronger than most people, even him, expected just a year ago. He calls January CPI an anomaly. We've had somebody else call it an anomaly. He says he expects better data in February and so on. He said the Fed should be in no hurry to lower rates as long as the economy remains this strong. So he says it's possible we won't even get one cut this year, guys. He said this is going to be a presidential year like no other. He said we can disregard previous data because this is going to be a fight for the books. I hope you guys enjoyed the video. Catch you in the next one.